Welcome, FinTech Talkers. Today we're going to talk about a shift that's bigger than FinTech innovation. It's the shift in the operating conditions of the entire financial system. My guest is Bill Capuzzi, CEO of Apex FinTech Solutions, one of the most important infrastructure companies in modern investing. This is the second time for Bill coming on the FinTech Talk show, and the first time I called Apex, his company, the Stripe of WealthTech. I'm going to go further today. And if you want a simple analogy, Apex is the AWS of WealthTech. Just as AWS provides the scalable cloud primitives for the internet, Apex provides the foundational primitives for finance. They power the mission-critical behind-the-scenes stack: real-time custody, clearing, fractional trading, and instant funding. Because of this cloud-native core, FinTech giants, brokers, traditional institutions can launch and scale investing experiences in weeks and not years. And what makes this moment perfect for Bill is that Apex sits right at the junction of three frontiers we cover constantly on FinTech Talk: prediction markets, the new forms of participation and price discovery, convergence of TradFi and DeFi, on-chain rails or on-chain finance, and AI, not as a cost-cutting tool, but as a force that reshapes workflows across investing and wealth management. Now, before we get into these three themes, I want to set some foundation. I recently wrote a piece that some of you may have read, The Four Forces Rewriting Financial Services in 2026. The headline is simple: finance isn't evolving in a straight line, it's being re-architected by multiple forces colliding at once. We'll cover all the forces as we talk to Bill today, from America First Finance, a changing Fed, to DeFi and convergence with TradFi or on-chain finance, prediction markets, and AI, and also the changing regulatory landscape. And force one is what I want to start with today: America First Finance. What looks like a new capital allocation regime? For decades, the system was optimized around globalization, cross-border expansion, reserve currency plumbing, and a macro environment where capital often flowed towards financial assets. But as reindustrialization of the US becomes an explicit national priority, the incentive behind capital formation, liquidity, market structure can shift, with direct downstream effects on fintech and wealth platform. You are watching FinTech Talk, sculpting the future with AI, crypto, and fintech. So, Bill, let's start with the foundation question that sets everything else up. If the US is shifting from a globalization first capital regime to an America first industrial policy regime, what changes first in market plumbing? Issuance, liquidity, settlement, or access? And what does that mean for fintech platforms built on top of that stack? All right, let's just go there.
Yeah. So, it's an interesting question. I think it's a obviously really topical question given where the world is these days. And I'd say a few things. One is, let's just talk specifically around the investing part of, sort of fintech. And I think the cool part is that, we have, let's call it, roughly 5 million clients on Apex from outside the US. By the end of this month, we'll have close to 40 million, and roughly 5-6 million of them are outside the US. And what I'm finding is that, the US market has the best companies to invest in. And so, this notion of, hey, sort of, globalization and America first, we still live in a world where most people from outside the U.S. want to invest in the U.S. market. And I frankly think that that's accelerating, not decelerating, and in part as a result of the access to the U.S. and the sort of barriers to get into the U.S. to invest are starting to come down. We can talk about stablecoin But the reality is, it's a lot easier if you're a mass affluent client in, let's just say, Brazil or Hong Kong or Korea to access this market. Historically, they didn't have access. Today, that they do. Um, just more broadly in terms of investing, what we are seeing is much more acceleration from outside the U.S. into the U.S. in terms of investing. More broadly, let's just talk about sort of globalization first. That sort of shift to American first, just more broadly. I think there's a few things to sort of
Hmm.
highlight. One is, access changes first, right? When policy priorities shift towards that reindustrialization in Main Street, you see demand for broader participation in the capital formation. And what that means is that the infrastructure has to support more investors, more asset types, and faster on ramps, which is kind of exactly what we've been building at Apex. I think a great example of that, Patty, is Apex Alts. Right. So historically, the access to alternative investments has really been for rich people. And what we did is really kind of leaned in as Apex, enabling access to alternative investments that can fund capital intensive projects tied to that reindustrialization that I mentioned. The plumbing has to evolve to support where the capital is going.
Very interesting. And I saw your recent post. I was doing my research, and you posted about Blackstone, and
Yeah.
I think a stat caught my attention there. So in the alts, or the alternative or the private capital market, this is like not public markets but private. There's a big gap between pensions and 401k. So pensions, according to your post, holds about 30% in alternatives, whereas 401k is only 1%.
Yeah. Yeah.
So there is an infrastructure gap to your point, and looks like you're building. So elaborate on that, if you will.
Yeah, well, there's a couple things. One, just regulatory wise, up until recently, you couldn't really hold alts inside of a 401k, right? And I think over the last, it's not even 12 months now, some of those rules have changed to allow for alts to now be held inside of an ERISA type of an account. So I think the first kind of barrier to entry was just getting the regulations in the right place. The second part is that alts have been historically something for rich people. And there actually are rules in the United States around you have to be what's called an accredited investor. And by and large, without going
Right.
into all the details around what qualifies an accredited investor, it's how much money do you have, right? By and large. And if you have a certain amount of money, you're what's called an accredited investor. You have to be an accredited investor to get access to alts. So there's a lot of work down in DC around how to change those rules. They haven't changed yet, but the access. So one is change the rules to allow 401ks to hold them. Two is start to lower the barriers in terms of who can actually sort of invest in these things. But thirdly, and you sort of said, Patty, is the infrastructure, the plumbing, the guts around investing in alts is incredibly old and cumbersome. And the transparency into what, let's just say you want to buy shares in OpenAI or an Apex, right? We're a private company. Your ability to get access to that in kind of a seamless way through APIs, which is kind of what Apex is kind of known for, really has not existed up until us building Apex Alts. So one, the rules. Two is obviously the rules around accredited investor. And then three, most importantly, is how do we take the plumbing and make it such that people can get access to these things just as easy as they can buy NVIDIA.
Yeah, yeah. So there is that regulatory piece, but maybe what I'm hearing you say, maybe this America First regime change, the changing Fed, could democratize that access to private alts. Obviously, other things have to happen, like the regulatory piece that you talked about. But then there's the technology, and we're going to speak about the TradFi and DeFi convergence later on. But that potentially could make it happen too, or it's an enabler. I did invest in Figure, my Cagney's Figure, which
Oh yeah,
IPO'd last year, is
yeah,
doing well, and he has that vision of providing kind of that blockchain based infrastructure, if you will, right? But what do you think? And are you, and maybe we'll cover this when we talk about TradFi DeFi convergence, but you see, is it a perfect storm of sorts that
Yeah.
is the right time for private and alts to take on? Yeah, go ahead.
Well, you sort of connect the dots between this alts conversation and this notion of tokenization of a security. And without going into a ton of details, part of the reason you mentioned about investing in Figure, like, Patty knew somebody that got you access to the Figure shares. And then once you got in, it was in what's called an SPV, and you get these offering documents. And then you finally put the money into it. You don't really know exactly what the price is that you bought Figure shares at. And then they sit in sort of in some SPV that you get a tax filing document once a year on. And so like it's pretty sort of I'm going to use a technical term. It's a pretty crappy process to get access. Number one. Number two is transparency around liquidity and pricing. And three is once you actually do make that investment, it's very difficult to try and keep tabs on what exactly that investment is. The one, I think, immediate benefit to this notion of tokenization of securities is around those private securities. What if you could take, like, let's use OpenAI, because I think that's one of the hottest private stocks that's out there, or SpaceX,
True.
right? What if you could hold that security in tokenized form and be able to sort of show, similar to the way a public security trades, that you can see a market, a two-sided market in OpenAI shares, and you can now transact on a quote-unquote exchange where you see the bids and offers about people that are buying and selling in that private security in OpenAI. Tokenization allows us to do that. Number one. Number two is I talked about sort of, okay, where do I own the shares, and do I get the different tax forms? Now you're holding something in a tokenized form, which provides much better transparency. So I've said this a bunch of times publicly. I'll say it again, which is I think this notion of tokenization of securities, probably the best application in the immediate term is in and around private securities, right? There is a direct application and there's direct benefit to a retail investor. Let's say alternatively, right, there's lots of talking about taking NVIDIA, a public security, and tokenizing it. And at least for the time being, and we'll squint and we'll talk down the road, Patty, but for the time being in the immediate term, I don't think there's a ton of application for a retail investor. It's kind of like a party trick. And the reason I say it is like, think about it. Okay, so you can now go on, two of us could sit here on this call, you could pick up your phone and you could buy NVIDIA shares immediately, right? And oh, by the way, when we launched, our overnight ATS called Bruce Markets, you can now do that 24/5. So like accessing public securities and having pretty tight spreads and a lot of liquidity is pretty simple to do. Now, this notion of, hey, now take that security, put it into a tokenized form so that I can take the stock and put it on a dongle, for what? Like, what's the utility for a retail investor to be able to do that in the short run? Because if you ever want to sell that security, it's not like you can take the dongle that has the tokenized shares, walk down the street, plug it into a different broker dealer, and sell those shares. You have to kind of go back through the same way you came in. So the utility for retail investor, at least in the short run, is not there, right? So yeah, I think there's a lot of application on the alt side, less so in the immediate term on the public security side.
Yeah, no, wonderfully put. And that may be kind of where we are, that private security markets kind of with the technology, with maybe the regulatory, maybe the America First kind of capital markets regime, they evolve and they take forefront. They become like almost public market. And you mentioned about your products, Apex's product, alls in this context.
Yeah.
Maybe to our audience, if you can elaborate what it does. And a concrete example I like to point out is Erebor, which is this de novo newly chartered bank. It's
Yeah.
not same as alt, it's more on the banking side. But what it is it's all blockchain and stable coins. It's kind of not only it's a de novo charter, but it's kind of ground up built, and it's Peter Thiel's behind it,
Yeah.
Parmaluki, a lot of big
Yep.
names behind it, and they're branding themselves as the new bank for innovation and defense economy. But what I'm hearing, and maybe you can share,
Yeah.
Bill, is alls is a corresponding thing for private capital formation.
Yeah. So the answer is yes, for sure. That the alt space um, is an alternative. If it's done correctly to going public, right? So historically, a company like Apex, if you wanted to actually raise real money, it was like, okay, you had a couple options. Yeah, you could sort of go to private equity and venture capital, but at some point after you get to scale, really your only option is to go public. And I think, now with sort of how the private markets are evolving, and how deep some of those liquidity pools are, places like Sequoia and Blackstone, there is a real alternative. Now, the challenge is that the infrastructure around that access is still really kind of nascent. And, like I said before, I use a technical term, pretty crappy. So what we did is we said, hey, look, if you have, our clients, we have, like I said before, we have roughly 37 million retail investors on Apex, through our 250 or so different partners. But if let's just take SoFi as an example, or Coinbase, who are clients of Apex. Why couldn't you just simply offer alts right alongside of the public securities? And we'll talk about futures or options, right? It should just be a simple other option to those people that qualify to access those alternative investments. And today, what happens is that retail client kind of has to go up, over, and down into someone like an ICAP, right? Or they have a relationship with their brokerage firm or their advisor over here, and then they have to open up a separate account over here to sort of and fund it to get access to alts. Well, why shouldn't you be able to sort of package that under one platform? And that's the whole premise behind Apex Alts, make it API based. Obviously, follow all the rules and regulations because there's a ton of Reg A, Reg D regulations in and around alts.
Of
That's the
course.
work we do behind the scenes, package it in a really simple API format, and allow for people like a SoFi to plug directly into those APIs and very simply offer access to that alts world. All right. That last piece of it that I think has been a ton of work is, if you want to buy a public security, you get access to the market, and every public security is available. Okay. In the world of alts, it's like, okay, Sequoia has its alts, and Blackstone has its alts, and then this firm has its alts, and each one is kind of a special snowflake. So part of the work here is, how do you create an umbrella to get access to this alts world, to provide A, transparency, B, choice, and C, sort of the ability to actually get real prices on these things. So it's not just the API stack. It's not about just making it simple. It's also about creating something where that retail customer has access to a much broader access point, than they historically would through other venues.
Gotcha. And before we kind of move to another topic or related topic, alls is, I think, mainly distributed through SoFi or other partners like Coinbase, SoFi, and others. You're
Yeah.
not envisioning at maybe a future time or maybe as a separate side business that Apex has a marketplace directly for small businesses who want to raise capital and come there and list their private equity, so to speak. Obviously, it's a different regulatory
Yeah.
model than a technology company, but have you thought about that?
Maybe, look, so, our the purpose of Apex, if you ask any person within our firm, and I'm pretty sort of obsessive about this, but if you ask any person, Patty, if you run into an Apexer, you can ask them this, which is, hey, what's the purpose of Apex? And everyone will have their own little slant on it, but the premise is, how do we help every person on this planet invest in their future, right? And so if you kind of use that as the anchor for the firm, and by the way, do that through this B2B lens, right? We're not a B2C company. We're actually not good at the B2C side. This is why, Apex is what Apex is that we partner with firms like, a SoFi is a good example. They do their part in terms of the UI, UX, the actual end customer engagement. And our job is behind the scenes to create the plumbing to bring to life really kind of on-brand investment solutions and do it safely, securely, and like I said, in a kind of fintechy way. So maybe, I don't want to say I'd never, but really our purpose is like building that infrastructure to get retail customers access to the things that they want to invest in.
Yeah, and as I said in the intro, you're the AWS of WealthTech. So
Yeah,
true to that spirit, right?
yeah, exactly right.
Bill, I want to build, yeah, and I want to build directly on what you said about plumbing earlier,
Sure.
because the next layer of plumbing isn't just faster settlement inside the existing system. In my forces piece that I referenced in my introduction, I make a distinction. Stablecoins are the tokenized dollar, a faster programmable settlement rail, but the
Yep.
real price isn't just T+2 to T+0. That's a wedge. And you alluded to this already in the private security piece. The bigger opportunity is what happens when assets themselves move on chain.
Yep.
Then cash, collateral, and securities can work together with lifecycle logic. And you get that compounding effect. Collateral mobility, cheaper financing,
Yep.
more resilient liquidity. And that is why your Coinbase announcement, I know we talked a lot about private securities and tokenization and alts, but in the Coinbase announcement that caught my eye, Apex is powering stock trading infrastructure for Coinbase's everything exchange.
Yep.
Feels like the very real bridge between TradFi or traditional FI plumbing and crypto native rails. So the question here is, from your vantage point, is the real opportunity here simply stocks inside a crypto app? Or is it the beginning of a new full stack model where stablecoins become settlement money and assets gradually become tokenized? And where do you think the first real unlock happens in plumbing? And you already talked about private securities,
Yeah.
but kind of other areas.
Yeah. So just follow on to what you had said is it's not about stocks inside a crypto app like that. That's been there for a long time, right? And I think what we're seeing now, if you think about it, the TradFi guys, think Robinhood of the sorts, have offered crypto inside of sort of their TradFi solution for a long time. Right. What we're now seeing is the
Right.
DeFi guys offering traditional, and part of this is a broader push on sort of the all-encompassing app, right? To support a retail. I don't even say even an investor, just a retail consumer, right? Because you're seeing the connection between banking and lending and investing and insurance. And I think there's a broader play around helping people manage their financial lives. Specifically, I think to your question, it really is a full stack rebuild, right? And we haven't talked much about stable coins yet, but stable coins are the wedge, right? But the real prize is when cash, collateral, and securities can move together with life cycle logic, right? That's where you get the
Mm-hmm.
compounding benefits that you mentioned: collateral mobility, cheaper financing, more resilient liquidity. Um, and so, yeah, the Coinbase partnership is a really good one because we provide the infrastructure. They obviously have all the DeFi rails. Apex has the TradFi. I say TradFi, but the public security rails, and you connect those dots. And one of the things I said before
Right.
is it's a party trick of sorts to tokenize a public security, but follow where this is going to go. right? So let's just stay here in the States, US investor, the infrastructure in our industry, the ability to go from T1 to T0, real time settlement, is, I'm going to say, a decade away, Patty. And the reason I
Hmm.
say that is
Hmm.
because the big
I
bank,
heard Paul.
yeah.
Mhm.
Go ahead. What were you going to say?
Go ahead. Go ahead. Yeah, I heard Paul Atkins talk about it, the SEC chair,
Yeah.
recently in his remarks. But you say it's 10 years away.
Look, and part of what I think is going to happen is that you're going to see a sort of divergence between institutional and retail, right, in terms of the infrastructure. And I say that
Gotcha.
because on the institutional side, the big pension funds, the big long only funds, they custody at these big banks that are sitting on COBOL code, IBM mainframe. And so there's a ton of unwinding of infrastructure that's been built literally over decades. And so I think what we're going to see is that is going to take quite some time to unwind, right? Hopefully not. I think
Hmm.
AI, as Claude came out with a plugin to sort of automate some of the COBOL code I saw recently, but you're still talking about a ton of tech debt inside these big banks. On the other side, and this is where I think retail is going to take the lead, what if, I'll use Coinbase as a good partner, is I have the cash in my account and I want to buy NVIDIA. Why shouldn't you be able to settle that transaction real time on chain? And I think that's going to happen. And I think it's going to happen sooner than later. What it requires is, you mentioned Chairman Atkins, there are some regulatory hurdles that I think the industry needs to get over.
Hmm.
And then the second part is, I think there's adoption. There's retail investors to kind of understand it. But I think the party trick that I talked about earlier, right? We need some changes infrastructure wise to allow that to happen. Once it does, right, the ability to, like, why does it take one day, 24 hours to settle a security? You buy something, you have the cash sitting in that account. Why does it take 24 hours to settle a transaction? It doesn't make any sense. And so I think we'll see
Hmm.
retail take the lead on leaning hard into this notion of tokenization and providing the ability for real T0 settlement. And then the second part, which is going to happen kind of in tandem, is this notion of stablecoin funding these brokerage accounts and starting to get away, especially when we think about international clients. But like I said, I got 5-6 million retail clients that are outside the U.S. and they have to all go from local currency into like base currency US dollars, which is an FX transaction, and then they have to use the US Fed wire system to get the money into this brokerage account. It's an incredibly slow and expensive transaction, right? Now you can go from real to USDC and then be able to fund the account using that stablecoin. The costs go down and the speed goes way up in terms of being able to get those transactions done. So that's happening. I think it's going to continue to sort of build momentum and grow in adoption, especially from the outside the U.S. coming in.
Very interesting. That was really good. It kind of
Yeah,
I can't even try to summarize it, but you talked about the T1 to T0, but also kind of the tech debt and some of the regulatory stuff. So maybe I'll ask you a follow up on the regulatory side.
yeah,
There's that market structure bill going through Congress or going through the committees.
yeah,
And there's a lot of public discourse, obviously, Silicon Valley, especially Brian Armstrong of Coinbase, well, your partner now, or customer.
yeah,
He had some objections that stablecoin yield and things like that. How I see it is the factory banking will stay banking, tech or Silicon Valley will stay Silicon Valley. Introducing tech companies as mini banks has the potential systemic risk to the system, is how I see it. But obviously, it's more nuanced.
yeah,
Um, Erebor was the other example, right? They got the charter if they wanted to do things like that, but I'm just going to ask you to comment on the Market Structure Act.
Yeah.
Where do you think, what do you like about it, or how do you see it panning out for some of the things you just described earlier?
Yeah. So I think part of the challenge is, I don't know, use the old saying, slow and steady wins the race. I think part of what the U.S. government is trying to be is progressive, but also sort of measured in how they're going to get from here to there, right? So let's rewind the tape
Hmm.
to sort of, crypto 1.0, right, circa 2021. The horses came out of the barn and there was not a lot of regulation. They tried to put the sort of genie back in the bottle and we ended up with a mess on our hands, right? The likes of, FTX and, some of the other firms that didn't do the right thing. And so I think, this time around we're moving fast, but I do, I applaud the government for trying to create guardrails to make sure we don't run into some of the same mistakes again. I think that's part one. Part two of it is part of the pushback you mentioned about, Brian, some of his comments around, stablecoin, some of the things that came down on stablecoin. The challenge is that you have these big banks in the States, Patty, that if you do some work around their earnings, they make a massive amount of money on what's called float. And
That's right.
float, the other word for float is friction. Float is basically just time. And it's like, hey, let's just say you want to fund your brokerage account today. You say, okay, I want to move money. You get back this message is like, hey, you'll see your money in your account in 2 business days. And like, you kind of scratch your head, like 2 business days, like what? But you're like, okay, well, it is what it is. I guess that's the way it works. And the whole reason that happens is, yeah, there's technological friction, but the reality is when that money's in motion, it's called friction. Other word for it is float. And so the challenge is that, if you start to strip out float from, the US banking system, it has a massive impact on balance sheet, on P&L, on, the earnings of, most of the bigger retail banks in our country. And so I
True.
think there's probably, I don't know this for sure, but I'm sure there's quite a bit of lobbying by those same banks to make sure that this doesn't sort of move too quickly. Um, and so what we'll see, similar to the way we see typical things, I think you're going to have those kind of bleeding edge, adopters that are going to be out in front that are going to take hold of this stuff. And over time, you're going to see sort of more mass adoption. I'd say, 5 years from now, this notion of real time, whether it's stable coin or just real time money movements, that is going to be something that has to happen in our country. And so, yeah, I think, and then, oh, by the way, the same thing overseas when we start thinking about, trading 24 hours a day. Why can you buy Bitcoin at, 2 o'clock in the morning, but you can't buy a U.S. security? I think we'll start to see the money movements and access to investing happening 24/7, over the course of the next, let's call it 3 to 5 years.
Yeah, yeah. I think well articulated the point. I think that democratization or retail, like if I pick parties, right? So obviously the retail, and Brian's main point is that crypto kind of offers the average Joe, so to speak, and brings in more people, kind of the more financial inclusion example. But what I think is that there are obviously more parties. So obviously there's retail, and we talked about Main Street, especially
Yep.
in the reindustrialization concept. There are all these small businesses, their access to credit and things like that, and their community banks that serve them. And then you have Wall Street wirehouses, the big banks, 90+% of deposits, the float and the friction that you talked about. The beneficiary is mostly all these top 100 or top 4, and then
Right.
the top 100 banks. So to me, I think a little democratization could be not just shift that to tech platforms, but maybe the community banks should come up victorious in this whole process. And that might be a good outcome given all that we're talking about with Main Street, reindustrialization of the U.S. But this is just kind of more my opinion, Bill. And we'll see how it pans out. It's
Yeah.
politics, lobbying, and all that, like you mentioned. But any last thoughts on that?
No, I think you're right. I think, the amazing part, Patty, is, we were talking before about the last time we saw each other. Think about all the changes, the positive changes that have happened for the consumer. And obviously I'm on the investing side of it, but, and then you start thinking about this layer of AI, which we can talk more about. The progression and the pace of change is going to continue to sort of accelerate, and by and large in a really positive way. And so, next time you and I talk, let's say it's 2 years from now, do the podcast again. By the way, we should have some predictions. I think the world is going to look a lot different than it does today, right? And
That's
by
right.
and large, in a really positive way for the consumer.
Yes, yes. And I want to move into AI. You brought it up, and then
Yeah,
also prediction market. You launched something there. But
yeah,
before we leave this, advice to fintech builders. Obviously, a lot changing. So on chain, settlement time. You alluded to 24/7. We didn't talk too much about it.
yeah.
The T1 T+1 obviously unleashes liquidity. So if you're a fintech builder listening to all this, what are the biggest opportunities they should build, either existing guys or new guys? Is it real-time portfolio experiences, always on rebalancing, event-driven investing, or smarter cash management, cash margin management for including small businesses? Where would you, or what are you seeing from your vantage point, Bill?
So I hate to say it, but yes, Patty, all of what you said, right? Which is, I think there's,
Okay.
we've look, there's a lot of positive change, but there's still a lot to do. And I think if someone was out there like, hey, I'm going to offer a, Robin Hood lookalike, don't bother. There's probably too many of them out there already, but there are so many,
True.
parts of, let's just take my retail investing world that still needs a lot of work. So let me give you a good example. Sort of this notion of, creating, financial plans for retail customers. Okay. It's still an incredibly manual, sloppy process that is really something that's only for rich people, right? I've seen some companies, we just announced a partnership with a company called Wavis today about how to take financial planning and go down market. And when I say financial planning, meaning how do I help somebody create a plan, right? And then consistently update it to help them get to the goals that they want to in their life. And, for rich people, they have an advisor, their advisor gets the financial planner. There's actually a person out there that does this for a living. And the financial planner, sets up a Zoom call, and that person asks you whatever it is, 100 questions, and gets all your statements and comes back with this like dossier that you get delivered in, FedEx to your doorstep. And it's, 150 pages of a financial plan. Like that whole process can and should be democratized. And we're seeing some of that already. And I think there's plenty of opportunity for us to continue to sort of disrupt the traditional advisory world. So yeah, what I would say to folks listening is, and by the way, I'm all ears. If people have ideas, like I said, we have, lots and lots of retail investors. If people have, creative ideas, reach out to me on LinkedIn. There's plenty of automation that's happened, but man, there's a lot still to go. So don't give up. And I think, frankly,
Yeah.
with the advent of AI, which we can talk about, I think the acceleration of some of these notions and some of the things that weren't possible, 2 years ago will be over the course of the next 2 or 3 years.
Yeah, the agility or the speed that and you've written or posted about it.
Yeah,
And before we jump into AI,
sure.
if I go to prediction markets first, Bill,
Yeah, yeah,
um, and it's a good segue
yeah,
from new things that fintechs can build. And I know you've launched something or launching something
yeah,
that will let a fintech builder plug into prediction markets without having to go through the complexity of
yeah,
connecting it themselves. But maybe just some foundation, because this is a new thing. A lot of people know about it, but maybe some foundations required.
yeah.
So
So,
prediction
yeah.
markets and event con. Yeah, go
No,
ahead.
go ahead. Go ahead. What were you gonna say?
No, so I was just kind of setting it up that event contracts are certainly moving from fringe to mainstream
Yeah,
as a real-time barometer of what's next. And you, as I mentioned, you've announced a turnkey prediction. But before we get into your offering and what this means to potential folks,
yeah,
if you can kind of just address what event contracts are so that the audience kind of up to speed, and then we'll kind of on the backside get into the details.
yeah. So let's at the purest level, prediction is a form of a futures contract, and a futures contract at the purest level is a binary outcome. Think yes or no, 0 or 1, at a defined time, right? And it dates all the way back, centuries ago, around predicting how sort of farmers and their crops were going to sort of play through in terms of the weather. And so the historically corn and wheat, grain, different prediction. Well, excuse me, futures sort of markets. Sort of that's how it evolved, right? I think what's
Yeah.
now sort of changed, and oh, by the way, there was two types of investors in futures. There was what's called hedgers, okay, which effectively are people that, like the farmer who needs to hedge their crop, right? And then there's
Right.
the professional retail investor. And I say professional, but they're pros that were trading in and out of those futures contracts. That was pretty much the market. Okay, there's institutional as well, hedge funds kind of involved as well. But retail, like mom and pop, and I'll ask you, Patty, have you ever traded a futures contract? Have you ever?
No, I haven't.
Yeah,
No,
and,
I
and
have
I'm not
not.
surprised, right? Because most people, it was really complicated security type, and most people either didn't have access to it or, frankly, were not educated and didn't were scared, afraid to get access to futures contracts. Okay, fast forward to today, and I
True.
think the entree point is in and around this notion of a prediction, which at the purest level just means that it is a futures contract, right? And so, I think was really interesting in and around the last presidential election, the the prediction markets, right? So the two big ones, Poly markets and Kalshi, were much better predictors of the outcome of the
Hmm.
election than the polls. And the reason for it, I think, well, it stands to reason. There was many more people sort of involved in the prediction market than there were in the exit polls, right? If we go back to the 50s, they would go out and do these polls, and people would participate in the polls. Today, most people don't participate, and so they go out and they ask 100 people. They get less than 10% of the people respond to these polls. And so what was happening was the polls were kind of off on the presidential election, and the prediction markets were pretty close to spot on as to what was going to come out. And in large part because they were a much better representation of the investing, sort of, population. So that's how things kind of evolved. I think, the sports part of it, which has kind of now been introduced in this framework of prediction, we'll see. I have a strong sense that over the course of 2026, we'll see legislation that will change some of what's happening in and around those sports predictions. But I see it, for Apex, we did the same thing similar to what I did for alts for prediction markets, which is, okay, if done safely, securely, it's not my job to sort of say whether or not Patty should invest in prediction markets or not. All right, if they're a lawful transaction and it's a proper futures contract, my job is to do it safely, securely, and sort of, as I said before, on brand. So very similar to what the approach we took on alts is how do we make it simple for our clients, in this case SoFi, to grab some APIs, plug it into their platform, and really simply be able to offer prediction markets alongside of alts, alongside of options, alongside of equities, and that's our job, right? I do, like I said, I do see the contention between state regulation and federal regulation. So this is the states versus CFTC. I do think we have sort of a
Mhm.
showdown coming over the course of the next probably 6 to 12 months around that.
Interesting. Okay, so there's something to be monitored. But as I see it, it's a new asset class or a new derivative, very similar to futures or options or what have you. Can be used for speculation, can be used for hedging, like you rightly pointed out. Um,
Right,
and if
and I
you
think
are a fintech,
I was going to tie it together. We're going to
go
talk
ahead.
about AI, but when you mentioned about legitimate hedging and portfolio sort of tool, um, you're going to see AI because I was at a conference last week and I saw some amazing tools that when I started in this business, I saw tools that are going to be handed to retail customers that were really back 20 years ago were for professional hedge fund managers, long only managers, and it's tools around how to connect the dots between, let's just say you own a position in Nvidia, right? And what you want to do is use options to collar that Nvidia position and also be able to use prediction markets in terms of understanding, okay, what's going to happen in terms of the broader sort of AI infrastructure, right? So you can go on Kalshi today. There's a whole bunch of different predictions that are out there, and if you start to stitch together, you have a position in NVIDIA, you have collars with options, and then you use futures, or in this case, prediction markets, you now can construct a portfolio that's much more thoughtful than just buying NVIDIA itself. And the cool part is there are now tools using AI that are allowing retail customers to connect those dots in really smart ways. Right. And I think a lot of that's driving and will continue to drive why options volumes are up. And I think it is part of the reason we'll continue to see growth in the prediction markets.
Wow. So in our spirit of democratization, you're saying there are tools that lets a retail investor kind of hedge their stock equity portfolio with, say, event contracts,
Yeah.
all in kind of some centralized dashboard, and that's awesome. Meaning that
Yeah.
brings the capability of these sophisticated traders or dealers to individual investors.
I think a lot, and so that's sort of still small but growing. A lot of prediction markets today is speculative investing. So people are, okay, what's the weather going to be like, in November? What's the outcome of the midterms? Who's going to be the next, Fed chair? That was a big, popular prediction that was out there. Binary outcome. Okay, so who's going to be the next Fed chair? Is it going to be, one of these four people? So there's a binary outcome, and there was a date at which it was going to end. That qualifies as a futures contract, and people are using those as ways to speculate on the markets, which has been around for a really long time. I think there's going to be the hedging, the portfolio management, like I said, and then there's going to be plenty of that speculative trading in and around the prediction markets that are going to come.
Okay. It's while I'm watching it, and for folks who are building, if you're the new Robinhood or new SoFi, Apex and Bill have a thing for you if you
Yeah.
want to integrate prediction markets to your offering. So do check their announcement and out on their website. Um, So, all right, Bill, let's maybe shift to AI. I know it came up a bunch of time, and it's kind of strange that we're talking AI last
Yeah.
in our conversation, but there's so much going on. It's a huge topic, so I want to frame it this way. It's starting to feel a lot of us in the industry like it's more of an industrial kind of revolution, not just another new app or not just another new software. So I recently attended a major AI summit with Jensen, Sam Altman, Anthropic, Google. Everyone was there. Microsoft, AWS, and that was the takeaway that it's not here are some new features you can do with our chat or with our model, but it's an industrial revolution. And the simple lens I've found that works well is that AI stack with energy at the bottom, chips,
Yeah.
infrastructure, models, and applications. And I know we're kind of concerned more from a wealth and capital markets and investment, more on the models and application layer. But I want to first maybe just ask you, do you kind of subscribe to that kind of overall notion that AI is more than just the app? It's this big change, big shift in kind of the equivalent to an industrial revolution where energy, kind of manufacturing, chips, infrastructure, obviously $500 billion getting poured into data center. So what's your kind of overall
Yeah.
perspective on that before we get into apps and models?
It's funny. I talked to obviously a bunch of colleagues about what they're doing in and around AI, and most of them are using it as sort of a better version of Google inside their companies.
Hmm.
People are using it for CRMs, people use them for some customer service. But the power of the tools, Patty, if you really get in, we're a big cloud shop. Like you said, it's a revolution. It's a total game changer. And so, I've got a little over 1,000 people at Apex. By and large, everyone at Apex is enabled to use either Claude Code or Claude AI. We built some tools in and around a sort of amalgamation of different AI tools that are out there. And the expectation is that every person at Apex is using this day in and day out. Not just about kind of, like you said before, party tricks. Not about like, hey, how do I respond to this email? Let me pop it into Claude AI, but about actually how you're going to change what you do. And what I say, I think there's, we saw recently with Block, saying that they're going to cut 4,000 people, and this
That's
notion of
right.
blaming it on AI. It's not about getting rid of people. I say it inside of Apex all the time. Like, this is not about I want to get rid of anybody, but it is about how do I take the people we have and make them 10xers, right? So you start thinking, Patty, like this is where this goes. Is I have an entire organization of product managers. I have, I don't know, let's call it 400 and plus engineers around the world, and I have a whole cohort of people that do design. Like this is the way software has been built forever, right? This agile motion, and you got product managers, you got engineers, you got designers, and they all have a piece and they sort of do their thing together. That all is coming together as one. The product manager, the engineer, and the designer, for the folks that are listening to this, like, yes, it's one. There's one person, there's one function that's doing all three of those things. And so the amazing part for me is, hey, if I can get all of those different groups of Apex all leaning hard into this, I just go, 10x the ability for me to deliver the next prediction markets, the next alts platform that I talked about, and doing it at a fraction of the cost and a tenth of the time. Like that is, like you said, revolutionary. And so, yeah, we talk about it,
Yes.
mention about our purpose. There's not a person in Apex that can escape me in talking about AI or posting some podcast that I listen to or giving suggestions on how to best use the tools inside. And it's working, right? It's not just, hey, the engineers and the product and the design come together. Yes, that's working. but like the young folks looking at how we're processing ACATs as an example, how can we use these tools to get better and provide a better solution to our customers? And um, yeah, I think it was still early innings, but I say this all the time. It's like, you know, it's going to create the haves and the have-nots. The folks that are leaning hard in as an organization today are going to be the winners 2, 3 years from now. All right, the folks that are still using it as sort of an augmentation or a replacement for Google, and playing around with with different service tools, like I do worry about them because I think this is something that's going to change the world, right? And you think about our lifetimes,
Yeah.
we're sort of roughly the same age. I've never seen anything like this, right? There's some analogies to back when the internet came out, but this is at a totally different level, right? In terms of the ability to harness that power and apply it to hard problems.
Yeah, yeah. I talk about it in terms of the printing press, which democratized knowledge, right? We cannot imagine a world without books and knowledge and where you can go read. Um, AI will do that to knowledge what printing press did in the 13th or 14th century, eventually led to the Industrial Revolution in Europe and so on. But that it's a whole another conversation.
Yeah, and I think there's
It
a
is
there's a
it is a force
fear.
multiplier.
Yeah, there's a fear that it's replacing humans. And the reality is it's augmenting human judgment, not replacing it. And I say that all the time. It's
That's
about
right.
enhancing trust, not undermining it. And I think, the part that I get concerned about in our country is there is a there is a race, right? And it's by and large the United States and China. Um, and we need to lean hard in here because there definitely is. You mentioned about globalization. There definitely is a bit of a quote unquote arms race. Probably bad phrase to use at this time, but there's a race between us and China, and yeah, we as a country need to lean hard in, not be afraid of this, not worry
Yeah.
about the energy side of it, and really kind of lean into embracing the like I said, the augmentation of human judgment, the enhancement of trust. Like that's what this brings. And I think globally it's going to create winners and losers, and then within our business for sure, right, there's going to be winners and losers. And I would just tell you, Apex is going to be on the right side of that for sure.
That's great. No, I'm sure. I'm sure. And we talked about this. I want to go to closing, but maybe briefly, if I could ask you one
Yeah,
more question on
sure.
AI, Bill. So you talked about the internal workflow changes, obviously getting cloud or whatever codecs and other
Yeah,
things, and streamlining. You can do what took years or months to
yeah,
in a week. So that's understandable, especially in the technology software development workflow. But if I kind of take it and put the lens on wealth management and investing, where do you think the first real workflow rewrites happen? Is it advisor research, portfolio construction, onboarding suitability, or entirely like new kind of robo advising models and stuff? Where do you think
yeah.
we might see the
Well,
first
you've seen
things?
it already. I mean, not too surprising, Patty. I think it's the tools that are coming out are automating some interaction between you, the retail customer, and that advisor, right? How do I make the advisor more efficient, right? And so to me, yes, they're good. Okay, so hey, I press the button and we're doing a Zoom and we're going through your portfolio, and now it's taking notes and writing it down versus you having an assistant sitting next to you writing down notes. Okay, like it's valuable. And I think you're seeing more and more of those customer service type of solutions that are already out in the market, where the real kind of value unlocks is how do we collapse a bunch of the functions. And we talked about some of this. How do you go from T1 to T0? How do we be able to sort of provide portfolio planning and construction tools to retail customers in their hands, right? Because you think about still an
Mm-hmm.
incredibly expensive endeavor, right? Think about, Patty. Do you use an advisor, Patty, yourself? How do you?
I have, but now maybe not.
Okay. Well, I
Say
have
again.
an investor. I'm in this business, and I have an advisor that I use. And when I look at sort of the Capuzzi payroll of sorts, not that I have lots of people on the Capuzzi payroll, but it's like, okay, I got to pay for my kids to go to school. Like that's obviously the top, and then the next person on the list is my advisor, and then a giant drop off to like the guy who cuts the lawn, and so it's very expensive.
Landscaper.
It's still a very expensive endeavor to you're talking about 1% of what your investments you pay to an advisor. I think there's a lot of opportunity for us to collapse a lot of that, the infrastructure side of it, right? So instead of it just being kind of cool tools to create better engagement for the end customer, how do we collapse the back end? And that is at that sort of infrastructure layer, which is where I think for the folks out there listening, the entrepreneurs, there's a lot of opportunity for us to collapse the infrastructure side. And we built this infrastructure. I think
Yeah, no.
your audience like come and talk to me about building stuff on top of Apex. That you mentioned about AWS, like that's the unlock is pretty significant for the industry for sure.
Yeah, no, true. And the line item that 1% or whatever commission economics is definitely up for grabs with AI coming into the mix. Thanks, Bill. This has been wild, but I know we maybe not wait 2 years and do another show just focused on
Sure.
AI, maybe because we didn't get to talk too much about it. But if I have time, do you have time for one more last closing
Sure.
question,
Yeah,
Bill?
yeah, sure. Yep.
Okay, so I kind of let's bring it all together
Yeah.
because we talked quite a bit. When you zoom out and connect these threads, the macro regime shift
Yep.
with the America First thing, the private security, the mainstream shift versus globalization, if you will. On-chain rails obviously speeds up settlement,
Yeah.
but other benefits as well in terms of collateral mobility and things, tokenization, private securities, but even maybe public and other asset classes. Of course, a new asset type, event contracts, which can be speculative, can be hedging. And then last but not least, AI and as a force multiplier of productivity.
Yep.
So, what does it mean over the next few years if you connect all these kind of forces, as I like to refer to them, for the retail investor? And I think you alluded a little bit to it
Yep.
already. FinTech and WealthTech builders, the second segment,
Yep.
and their investors. And of course, the incumbent advisors, we just talked about that commission angle. So you can combine the
Yeah. Sure.
answer around all those three segments, but who's
Let's.
best
Yeah.
positioned to win and what has to change first to get there responsibly? Go ahead.
Yeah. So let's take each one because I think there's sort of a different answer for each
Sure,
one.
sure.
Retail investor is going to be the big winner. And I think like I said, Patty, last time we saw each other and the positive momentum for retail investor, it's going to continue, right? Access is expanding, more asset classes. We talked about them, more hours, right? So people will be able to trade, equities at least to start 24 hours a day. More ways to participate in the markets, right? The infrastructure is finally catching up to investor expectations. Right? You think about it, I can get on my phone while we're talking here, press a button, and have dinner here in about less than an hour, right? But you can't settle a trade within 24 hours. So I think retail investors big winner. I think the fintech builders and the investors behind them, the opportunity, like I said, is pretty enormous. But so is the complexity, right? The winners will be firms that plug into modern infrastructure like Apex and focus on the experience, right? Getting the experience right and making sure that that's sort of the focal point. For the incumbents, right, the disrupted, I'll call it, there's this sort of existential threat, right? Your audience is coming for those incumbents. And I don't think JP Morgan's going anywhere anytime soon. And AI automation isn't really a threat. They can be force multipliers, But it's those firms that embrace that will win. The ones that don't will get disrupted. There is no doubt in my mind that some of the firms that we look at here today as the big winners in our business, right? And I won't name names, they won't be there in 10 years because there's other firms coming up. But watch, it's again, I still have plenty of friends over at Robinhood, just incredibly impressed on the path forward, right? They had a big announcement, I think it was today or yesterday, around advisory connecting
Mm-hmm.
direct to consumer. Like, pay attention, right? They're connecting the dots between sort of self-directed and advisory and doing it in a way that's very different than traditional advisors have done. So, yeah, I think it's an amazing time. You can do one of three things. You can stick your head in the sand and or put your fingers in your ears and say nothing to see here. You can lean hard in like Apex is because you can embrace the opportunity, or you can find yourself somewhere in the middle, right? And so, yeah, I just encourage the audience, and this is kind of my passion, is lean hard in. There's plenty of opportunity, especially for, like I said, those fintech builders. So, yeah, love to talk to any of them that are out there that want advice. I'm happy to provide some of that down the road.
Yeah, I do mentor, advise, and have a network of founders and startups. I'm happy to. Some of them would love the advice, Bill. Thanks for that. So, Bill, this has been fantastic, super grounded, but also very forward looking. For everyone listening, if there's one takeaway, is that we're not just watching new products show up. We're watching the plumbing, the instruments, and the workflows of investing change at the same time. And Apex is one of the few companies with a front row seat across all of it. FinTech Talkers, if you enjoyed this episode, please share it with one founder, one wealth manager, and one operator who's building the next generation of markets. Subscribe on your favorite platform and follow us for the clips and deep dives. Bill Capuzzi, CEO of Apex FinTech Solutions, thanks for joining me on FinTech Talk. All
Patty,
right, everyone. See you in the next episode.
good to see you, Patty.
Okay.